Assalamualaikum warahmatullahi wabarakatuh. My name is Ferry Irawan, NPM 2141189 from Management Class 21 Combined. Here I will present a little material about the nature of use of accounting. Accounting plays a fundamental role in business and daily life by helping individuals and organizing keep track of finance, make informed decisions, and ensures compliance with financial regulation. This presentation will cover the core essence of accounting, its principles, and its practical application in various sectors. We will also explore how accounting supports decision-making, provide transparency, and contribute to financial stability. Definition: accounting is the systematic process of recording, classifying, summarizing, and interpreting financial transactions to provide stakeholders with meaningful insight into an organization's financial performance and position. Key point: financial recording. Accounting involves detailed documentation of all financial transactions, ensuring a historical record of all financial activity. Number two, classification and summarization. Transactions are categorized to create concise summaries that make financial information easier to understand. Number three, interpretation and reporting. Accounting transforms raw data into report which aid stakeholders in making informed decisions. Next, the nature of accounting. The core nature of accounting. Accounting is both an art and a science. It involves both technical process, such as bookkeeping and interpretation skill to help users make sense of financial data. Characteristic number one, objective and reliable. Reliable. Accounting strives for accuracy and consistency, ensuring that financial information is trustworthy. Number two, relevant and timely. Accounting provides relevant information promptly to help stakeholders make timely decisions. Number three, systematic and structure. Accounting follows a structured process based on principles and standards, such as generally accepted accounting principles (GAAP) or International Financial Report Standard (IFRS). Next, the purpose of accounting. Number one, decision-making support. Accounting provides data that help managers and investors make informed decisions such as whether to invest in or expand a business. Number two, financial control and accountability. By keeping track of financial transactions, accounting ensures that funds are used efficiently and responsibly. Number three, performance measurement. Accounting measures business performance assessing profitability, liquidity, and solvency, which helps stakeholders evaluate a company's financial health. Number four, legal compliance. Accounting ensures organizations adhere to financial regulations such as tax law and auditing requirements. Next, use of accounting in different sectors. Number one, business and corporate sector. Companies use accounting to manage finance, make investment decisions, and evaluate business performance. Example, budgeting, forecasting, and preparing financial statements like income statement, balance sheets, and cash flow statement. Number two, government and public sector. Government use accounting to track public funds, manage budget, and ensure transparency and spending taxpayer money. Example, budgeting for public project and financial report to maintain accountability. Number three, Non-profit organization. Non-profit rely on accounting to track donations and grants, ensuring funds are used and intended by donor and regulator authorized. Example, reporting financial to meet grant requirements and maintain donor trust. Number 4. Personal finance. Individual use accounting principle to budget, track expense, and plan for future financial goals. Example, managing a personal budget, saving and investment, and tax. Next, types of accounting. Number 1. Financial accounting. Focus on preparing financial statement, income statement, balance sheet, cash flow statement for external use such as investor, creditor, and regulator bodies. Objective: provide an accurate view of the company financial information and position. Number 2. Managerial accounting. Involve preparing internal report that assist managers in decision making. Objective: help with budgeting, forecasting, and internal financial planning. Number 3. Cost accounting. Focus on calculating production costs essential for setting product price and controlling expense. Objective: help business minimize costs and improve profitability. Number 4. Auditing. Involve examining financial record to ensure accuracy and compliance with laws and standards. Objective: provide independent assurance on the reliability of financial information. Next, accounting principle and standard. Key principle. Accrual principle. Revenue and expense are recorded when they are earned or incurred, not when cash in exchange. Number 2. Consistency principle. Companies should use the same accounting methods over time for comparability. Number 3. Conservation principle. Accountants should report potential loss but not unrealized gains. Number 4. Materiality principle. Accountants should focus on significant items that impact financial statement. Accounting standard. Number 1. GAAP, General Accepted Accounting Principle, and number 2. IFRS, International Financial Reporting Standard. Next, accounting as a tool for decision making. Accounting provides essential data for number 1. Investment decision. Help investor determine whether a business is worth investing in. Number 2. Credit decision. Allow creditors to assess a company's ability to repay loans. Number 3. Operational decision. Enables managers to allocate resources efficiently and plan for future growth. Example of decision making: a company financial statement indicates strong profitability but weak cash flow. Based on this, management may decide to increase liquidity by selling assets or reducing expense. Next, ethical consideration in accounting. Ethics are essential in accounting because they ensure transparency, integrity, and trustworthiness in financial report. Key ethical principles. Number 1. Integrity. Accountants must be honest and straightforward in their work. Number 2. Objectivity. Accountants should remain impartial without bias or conflict of interest. Number 3. Confidentiality. Accountants must protect sensitive financial information. Consequence of ethical lapse: unethical practice such as misrepresenting financial data can lead to scandal, legal consequence, and loss of trust. Ethics in accounting build confidence among stakeholders and support the credibility of financial reports. And conclusion, Accounting is a critical field that supports financial management, decision making, and transparency. It serves various sectors by providing accurate and structured financial information, essential for business growth, government accountability, and personal finance, and as an essential tool, accounting uphold ethical standards to maintain trust and reliability in economic activity. By understanding the nature of use of accounting, we can appreciate its importance in shaping sound financial practice and supporting economic stability. Maybe that all I can say. Ayan, wassalamualaikum warahmatullahi wabarakatuh.